The US dollar has fallen yet again. It's gone down to about 2-week lows relative to a basket of currencies. This has been good news for emerging market currencies like the South African rand. The rand is trading around 13.50 against the US dollar and is doing quite well against the pound and the euro as well relative to where it's been in recent days. So that's been positive. It's been positive. The weakness of the US dollar has been positive for gold prices and also copper prices. But some commodities will have benefited and others won't have, but those are the ones that I notice that have. In the meantime, we see that crude oil prices have come down a notch, and this on the basis of information yesterday which suggested that there's still quite a lot of inventory in the United States. We're going to get more information as well today on that from another agency. It's expected that that's going to continue rising, which should keep the oil price in check, but it's still nicely above that $50 a barrel mark. And then we are also seeing that in terms of the all-share index, we are trading in positive territory, but in the European markets, they're not doing so well. Let's take a look at the indicators. Well, I'm joined by Herbrand Smit. He's from NEFG. Thanks for joining us, sir, as always.
My pleasure.
Good stuff. Markets appear a bit subdued following the release of the September US Fed minutes yesterday. What's your interpretation of them? Could it mean that a rate hike in December looks less likely in the United States?
Yeah, I think so. These analysts push up expectations all the time, and everybody's eyes are on the Fed's next move. And certainly over the last few months, the talk was certainly that the economy is doing better, jobs are lower than it's ever been, and you probably expected a certain December rate hike. Our view was over the last 2 years that the US are worse off than people expect, and they're not going to be easily putting up and normalizing their interest rates. So if you look at all the debt in the autos, etc., in the US, that's a major bubble boiling. If you put up interest rates, they're normally very cyclical, and you'll see some trouble in the US, and they probably step off the gas on that front. So, yeah, we think there's some opportunities in those.
It's an interesting perspective and not one that I've heard recently. And in terms of gold, like I mentioned, that is flirting with the $1,300 an ounce level, ticking up nicely on the back of a weaker dollar. Now, for folks who are watching at home who may be interested in investing in gold, what instruments or products can they buy into?
Yeah, look, we got a exchange traded type of gold scenario where we got new golds trading on the JSE, so you're getting the rand gold price when you buy those with a little bit of a fee to store those. But those are normally the best liquid assets that you can buy. The other option, of course, to actually own Kruger rands yourself over time. Those will pick up similarly to what the new gold ETFs do trade. There's some other ones as well, but those are the two most liquidity into South Africa.
Okay. And then the United Kingdom not having a good time with its negotiations with the EU. The EU has warned them that if they don't sort out the settlement of their divorce terms by December, it's going to be impossible for them to talk about other things like trade and all the other nice things that the UK wants to achieve. Do you foresee a hard Brexit? And if so, what are the broader implications?
Yeah, look, I think in the price of markets, a hard Brexit is probably already priced into. If you look at companies on our local bourse like Into Properties, Capco, Hammerson, a lot of the companies that got exposed in the UK, Bright, for instance, etc., they've been hammered. So a lot of negativity on those. Yeah, and you'll probably see some outflows of banking, big banking institutions out of London and going elsewhere in Germany, and there's a lot of rumours on where they will go actually with their business, but they need EU partnerships to actually cover the whole block. So they'll probably move. So you're going to see job losses, you're going to see some trouble in the finance sector, and you're probably going to see some bloodshed further into some of the property markets. But I think most of our hard Brexit is probably priced into the shares at the moment, but only time will tell with that. Maybe we're wrong on that side. And yeah, I think they need a bit of a hard landing, because otherwise other countries are going to want to follow. And to keep the EU in place and the euro as a currency in place, you certainly don't want others to follow.
Indeed. And then in terms of the implications of the rand-pound, pound-rand relationship, should that be better for South Africa?
Yeah, look, I think a lot of bad news is priced into the currency as well from a pound perspective. So the pound actually weakened a lot against the US and the euro, etc. after Brexit, the first 2-3 months. It's actually been strengthening over the last few months. And they're talking about an interest rate hike as well, almost a certain on that front. So it's not so bad in the UK. If your pound actually depreciates, it's good for inflation, and it's also it gives you some scope to put up interest rates. So from that point of view, we think the pound's probably going to be a bit stronger than most people expect.
Okay. And then let's take a look at a couple of consumer stocks, if time allows. Taste Holdings, they came out with their interim results for the 6 months ended August. They've registered weaker profit levels, and revenue overall rose a mere 4% to 207 million rand. What do you think of this company and the various businesses it runs? It runs restaurants and jewelry stores.
Yeah, look, they've actually tried to unbundle or sell their jewelry stores, and there was some party interested, and it seems like they walked away from the transaction. So everybody at the moment are a bit cautious on it, because they worry about what's happening at NWJ and so forth, and the watch businesses and so forth. So in the old days, they were good cash generative businesses. I haven't gone through the whole statement today, but that's the one side of the business. The other side is the consumer business. We've got Domino's Pizza is probably the most dominant, and most stores in South Africa. It's been a difficult time. We saw famous brands coming out with difficult period as well. Their earnings dropped by 60%, and you're seeing similar numbers here. So yes, the net asset value has actually declined, earnings has declined, so not a rosy picture.
In terms of, if you're an investor, do you stay if you're in there already? If you have cash, would you invest in there or not?
Yeah, we don't like it. We think it's one of the smaller ones. So normally some of the smaller ones get consolidated or get out of the business over time. So our preference would be some of the bigger guys. But at the moment, we're still staying away. We just had bad numbers from famous brands and Spur. We just had some from Taste. And I think you probably have another round of bad numbers before you start looking at these. All
right. Okay, we're going to leave it there. Thank you very much for your time, as always. Herbrand cautioning investors or potential investors around consumer stocks. We are in a very lackluster economic growth period. We've just come out of recession, so the consumer's not doing terribly well at the moment.